Hello, everyone, and welcome to episode 67 of Underexposed, our weekly macro show, getting all the biggest topics and trends impacting crypto and broader Web3. Today is Tuesday, April 7th. And folks, piercing volatility continues to be a theme into Q2 26, and yet markets continue to broadly shake it off. What's driving this level of price support, and is there hope around the corner? We're going to talk about it on today's show. I'm your host, Tyler D. I got my co-hosts in the house. First up, Dees, GM, how you doing?
Doing well. Coming off a nice little Easter week and a little checking out and spending time with family. So glad to be back to monitor the situation with you guys.
Indeed, there is a lot to monitor, seemingly more by the day. Peter Jennings on with us here wearing his Masters green. Peter, GM, good to catch up with you after spring break. How you doing?
I'm doing great, man. Hope Cabo was fun for you. And trying to ignore the world being on fire as much as I can while still paying attention to markets. So it's tough. We're certainly in the deep fog of war right now, which makes things really challenging. But family's good. Enjoyed Easter, and it's beautiful here in Colorado, so can't complain.
Spring break was quite nice, and I feel like it kind of shined a light on the difference between the permanently online folks who are just running around, their anxiety levels through the roof, hair on fire, and then you've got another group of folks who are just sitting in the sun, having a cocktail by the beach, and there's probably a happy medium somewhere in the middle. But it was probably the most I've been unplugged from CT, from market action, maybe like 4 or 5 years. And it really seemed like it was a pretty quiet week, other than war escalations, market-wise, crypto-wise. Wasn't a ton in the past week from a major headline standpoint. We'll catch folks up on today's show as we get into some of the topics. But it did seem like perhaps spring break, teams were perhaps taking spring breaks from driving on-chain updates. But we'll get into it on today's show. What are we going to talk about? We're going to talk macro, this Trump volatility increasing by the day, prediction markets crushing private secondary market demand. We're going to take a look at that list from Turner Novak, some new quantum threats, the drift exploit, what we're trading, and a lot more. A few housekeeping items before we get started. We are live on Kick. We're streaming on Kick and X. As always, you want to make sure to follow our channel. We'll be streaming there going forward for all of our shows. And then Yeet giveaways. Folks, shout out to our partners over at Yeet. Built for Big Moments is live. So that is the big tournament that happens every once a quarter or so, where different affiliate teams compete. Whoever drives the most volume gets the most back in prizes. We're going to do our part for our morning minute subs and affiliates. We're going to do 2 $500 giveaways here today. So to be eligible, once again, you'll need to have registered over on Yeet with the morning minute affiliate code. Sign up for today's spin. We will spin the wheel at the end of today's show. And again, select 2 winners. So you want to stay tuned for that. And as always, before we get started, a quick disclosure. The opinions expressed on this podcast are those of the speakers and do not reflect the views or opinions of any organizations they're associated with. We are here to share insights, provoke thought, and maybe even stir some debate, but this is not, I repeat, not financial advice. While we talk about markets, investments, and trends, remember your financial decisions should be made with the help of your own research or with advice from a licensed professional. All right, well, let's get into it. Catch folks up on the crypto board here. It does look like we're mostly flat over the past week. So Bitcoin's up 2%, hanging out 68,160 right now. ETH up 1%, 2079. Solana down 3%, 79. So again, fairly flat. It's been a fairly flat month at this point. So Bitcoin's up 1% on the 30-day. ETH up a bit more, 7%. It seems broadly that the biggest story in macros is the Iran war. And then from today, just Trump driving volatility. A fairly unhinged tweet coming out here this morning. And yet it seems like anytime we see one of these volatility or war escalation headlines, markets are broadly shrugging it off. Like we're down 0.5%. I mean, today, perhaps down a little bit more. Let's see. NASDAQ's down 0.8%. Dow's down 0.6%. And crypto's down a couple percent on the day amidst ongoing and piercing volatility from Trump. So, Peter, I'm curious for your thoughts. Why do you think that is? Like, have you been surprised at how steady markets have been? And certainly, not all markets are steady. Like oil's at 115, so it's been continuing to grind higher. But I'm curious if you have any thoughts or reactions to markets broadly shaking off at least a lot of Trump's commentary.
Yeah, I think at this point in time, it's just such a, we're in such a thick fog of war that people aren't reacting as severely to Trump's commentary. There's been a couple things that he's done. Broadly, he's trying to, have the negative headlines over the weekend and then a good headline to start the week. And we've seen that through this war that the market has done well in the beginning of the week and then sold off at the end of the week. So that is one trend to keep paying attention to, which I think is highly correlated with Trump's communication. I think the market in general is pretty hedged. I think there's a lot of people who are trying to hedge their overall portfolio. And I think especially on, the money management side, people who are managing capital, their bias is going to be, hold it out and just, invest for the long term, don't sell, because there's much more risk reputationally to sell and then get, the announcement that the war is over and have things rip. So a huge pool of capital is just kind of set for the long term. And then the more active traders, I think, are quite hedged across the board. So I'm surprised by the volatility. I thought we would have more volatility given everything that's transpired, especially when you pile on risks in private credit, the AI disruption, which was a huge topic before that really hit software names, and then the war. So plus you have midterms down the road as well. So it is surprising that we haven't had as much volatility, but I think it's a combination of managed capital really just kind of holding and then the rest of the market being somewhat hedged.
It does feel like our folks trying to effectively front run what played out for like Liberation Day, April 2025, right? Where the Trump tariffs, S&P sold off a full 16, 17%, and then rebounded all the way back in, what was that? Less than 2 months. And then of course grinded higher. Different scenario, but a decent analogy. And it seems like we're just not going to sell off as much, or at least so far. This, of course, is dependent on how long this is going to continue. Where are we at off peak? So we basically hit 7K now. The low was 63. So a 10% down move, and it's already started to recover. In fact, the S&P only down 4% on the year. It does feel surprising on the surface, though. I think you gave a good explanation. Deez, I'm curious for your reactions just broadly to this volatility, Trump commentary, and then perhaps, from a market's perspective, surprises how much it's been shrugging it off on a day-to-day basis.
Yeah, I'm definitely surprised it shrugged it off. Last year, we went down like 20%. Around this time, or like February through April, because I remember tax time being pretty brutal. And I thought maybe we would see something like that again, or I was kind of in my head planning for 20% down on the S&P. Should be like, I don't know, like 5,500 or something. So yeah, I mean, all things considered, it feels kind of good. I mean, I don't like the Trump comments at all. Those don't feel good at all. Feels incredible to wake up and read some of this stuff. Like it feels like you're in a reality TV episode, which it kind of is. But yeah, it's tough to like want to buy. If I buy anything right now, I want to buy Bitcoin. I don't want to buy like the S&P or stock related stuff right now. I don't know if that's because I'm an idiot or not, but like if I still think stocks could go down another 10%, and I think the war stuff is still more uncertain than the market's pricing it in, I don't really want to buy stocks this close to the peak. Whereas Bitcoin is like, I think, a more relative risk wise. I like Bitcoin at like 65K. We've kind of, I feel like, put in a bit of a bottom. And if stocks go down 10% and Bitcoin goes down 10 or 15%, whatever, I think the upside on Bitcoin is starting to look nice again.
That's interesting. It's actually on the call sheet I wanted to discuss with you guys. Do you feel like Bitcoin's done a better job holding up as a geopolitical hedge this time around, or is it more just chalked up to the fact that it was already down 50%.
I think it's the latter. I think we've talked about that a lot over the last month or two or 3 months now. It feels like we've been here for a year, but it's only been since February that we've been in this like 65 to 75K range. I think the longer we're in this range without breaking down while stocks go down, while the world is uncertain, is like, bullish. I don't think we're lagging the other assets in the world right now.
Yeah, I think that is fair. Peter, curious, any other, I guess I'm curious, you kind of explained why you feel like markets aren't reacting more. I guess, what is your concern level broadly looking at markets right now? Is it roughly the same? Has it been elevated? Has it decreased over the last month?
Definitely, for me, it's elevated, but at the same time, we're still fighting this mega trend of dollar debasement, which, one other thing that we haven't discussed is the impact on the petrodollar and just all of the kind of fourth turning stuff that seems to be coming to fruition. So you need to have your capital in a place where you feel like you're not going to have it eroded in terms of your purchasing power, which is really tricky. There's no real place to hide. You are getting decent returns on things like treasuries. So maybe that's a safe place to be. But again, my broad view is that things are going to go up on a nominal basis over time. So, and I have a lot of time on my hands, given my age. So it's really tricky in terms of just how to allocate. But I've been in a more defensive posture in general. And I know we'll get more into crypto, which is where I would love to be reallocating more capital, but we have this quantum overhang, which I think is really kind of capping the upside. Because I do think there are a lot of signals that Bitcoin wants to go a lot higher, but the quantum overhang, which I know we're going to talk about, is impacting kind of the upside, because we have a lot of people wanting to get more exposure, and you have Sailor just blasting away. And I don't think there's like a ton of sellers really either, other than this quantum concern.
Miners. The sellers are the miners, basically.
Yep.
Is Riot and Mara, I think Riot sold 250 million, I think, in Q1. And a few others are continuing to unload as they continue this pivot into AI infra. But you nailed it. There's a lot of positive a lot of positive catalysts. Like the Bitcoin ETFs yesterday had 470 million, a 6-week high. Stretch trading is below 100, so it's just under par right now. But it did enough volume yesterday for another 1,000 Bitcoin. It powered 70% of Sailor's $330 million in buys last week. So Sailor's buying, people are buying via the ETFs. I'm seeing more sentiment online that the bottom may in fact be in. There's some technical indicators like RSI that perhaps show, that do back that up to a degree. But is it all for naught until the quantum issue is solved? And it seemed like this was arguably the biggest story of last week that I picked up on while I was out on spring break, was these two papers, one that Google drops, and I'm forgetting who dropped the other paper, but basically saying that you need to move up your Q day, your quantum timelines, that's happening sooner than you thought. And I think perhaps most notable about this Google story, I think that they effectively like encrypted the paper, like it was done via ZK proofs. So not everyone could just easily see like how this would be done in theory, which gave more weight to how serious this is. And then even today, Cloudflare came out and said they're basically working on a 2029 timeline. So it's Google and Cloudflare. I'm laughing perhaps out of fear. They're both saying 2029 is the timeline, and the clock is ticking. And I think this is in line with what some folks who've been digging into this space are saying. Basically, we have 3 years to solve this, or Bitcoin, perhaps all crypto, in serious trouble. I mean, Peter, how have you been thinking about this, reacting? Is it giving you real pause?
Certainly is. I mean, we got to figure out a solution for Satoshi's coins. We need a quantum resistant plan. I think Nick Carter's been prescient on this, and I've enjoyed listening to his content. For anyone who wants to hear more about quantum, it's hard to find good resources, but I think he's posted quite a few good things. And then on the Brink podcast, they talk about it extensively. So I think he's broadly been right. Of course, there are other people who are pushing back. A lot of the Bitcoin devs are pushing back, but the concern is that we don't move quickly enough as an industry, and specifically on the Bitcoin core team. Like, what? I'm nervous that they're not going to move quickly enough until it's a little too late, which would be really, really concerning. So we'll see how it plays out. I think the market definitely is concerned about it, and I'd love to see more progress on a solution, because I think if we had a plan for how to handle this, then we could really see some appreciation on Bitcoin, given all the geopolitical events and everything going on. I mean, Bitcoin in theory should be doing phenomenally well right now, and I'm still a huge believer in kind of a mathematical store of value, which is what Bitcoin is. So hopefully we get a solution here, or at least a plan for some form of a solution and progress being made, because to me, it's a clear issue. And just with where AI is and everything else, it does seem like we could make exponential progress on this. And there's a lot of valid sources pointing out that this could happen sooner rather than later. And of course, I have no, personally, I'm just trusting the resources that I'm reading and hoping that, the likes of Google and someone like Nick Carter understands it, because this is obviously way over my head personally, but it does seem like a real risk. I think the market thinks it's a real risk, and it'd be great to have a solution.
And I think that's my biggest concern, is that seemingly every quarter we're getting a new update on this, and the timeline's moving up. And at the same time, we're seeing that we're on the cusp of exponential increases in artificial intelligence. So the most obvious scenario for me is the timeline continues to shrink. That it's much more likely to be sooner than later is where my head is. And even if it's not, it still feels correct to be preparing for that. And the other concerns I've seen, I haven't been super deep into this, but just roughly, like, even with the plan, it could be 2 to 3 years for Bitcoin to even execute like a roadmap or a transition, which of course extends the timeline. So not only do you need to come up with a solution, you also have to execute it within a shrinking timeline. Dee's curious for your reaction to part 2. Like, is there a scenario where another crypto asset wins if Bitcoin doesn't solve this? Like, could it be bullish ETH? Could it be bullish as Zcash if they solve quantum? Or would Bitcoin, failing the quantum test, effectively just bring everything down with it? Curious if you've thought much about that.
Yeah, my gut reaction is something I want to say that could take its place, but could definitely benefit from the Bitcoin community not coming together to come up with a solution and implement it. Like, that seems obvious. We all have come around this. We like using a decentralized blockchain to make transactions, to use decentralized finance. If Bitcoin implodes because they can't come together and get it together, and Ethereum does, or Zcash does, or all these other things do, then I still think like capital flows out of Bitcoin into those things. I don't think we just abandon the whole ecosystem because we're like, well, Bitcoin failed. All this other shit's actually useless too. I think like if Bitcoin fails in this way, it's going to be such a just catastrophically depressing and sad event, though. Like
Yeah,
it's gonna be worse than 1010. It's gonna be worse than FTX collapsing. It's not gonna be pretty. But I think like out of the ashes of that would be like stuff that people still find a lot of value in and use all the time. I don't know if I'm fully prepared for that scenario. Like, I still have a good amount of Bitcoin relatively. And I think in general, I have been pretty optimistic that we can just figure it out. But I think in general, I might be too optimistic about the coordination of like decentralized entities. It's hard sometimes when you have such a decentralized group of people trying to do something together, and you need a certain amount of buy-in from a certain amount of individuals, and everyone has differing opinions and all that shit. So I think sometimes I'm over optimistic about that type of stuff.
Yeah, I think I guess the good news is if there's no meaningful progress in like 6 to 9 by the end of this year, 6 to 9 months, that would be a pretty bad sign, I think, or at least giving you a timeline of which, like, if you seriously want to consider hedging or figuring out like, what to do, that's a bit of a perhaps timeline to execute on. But then that also lines up with the 4-year cycle maximalist October bottom, right? So if there's no progress till October, a few more negative headlines come out, we go down to 48, whatever, 50. And then a solution comes a couple months later, right? You don't want to, that would be fairly devastating. A part of me would want to think that, like an Ethereum, like how could ETH ever flip Bitcoin? I think it would have to be perhaps driven by quantum, but then a real part of me feels like if Bitcoin was to become very susceptible to a quantum attack, they would probably just crater everything. And it would be hard for anything to find a new high to build real long-term trust. But perhaps on the order of decades, it could be done. But this is so dark. I don't even really want to spend that much more time talking about it. But we have to, right? Because it is.
You got to think about the worst case scenarios as an investor here, right? And it's like, well, the worst case scenario in this world we're talking about is that the quantum problem doesn't get fixed. You know, there's millions of Bitcoin that can be moved and spent that aren't owned by the people moving and spending it. And the value destruction from that just spreads like the plague across the whole industry, and everybody just goes in, hits the red button, and then sends it to their bank account and forgets this world exists. Like, I don't think that's what's going to happen, but that's right. Like, that's the worst case, right? Like, nuclear bomb hits the blockchain ecosystem, everyone clicks the red button, liquidity dries up, the lights go off, it's over.
We all pivot to AI.
We're trading 24/7 prediction markets on Robinhood and Call Machine and Polymarket now.
I mean, on that note, that's actually a decent seg to a lighter topic.
Yeah.
Turner Novak shared this tweet yesterday. I thought it was pretty interesting. The 30 most in demand, so private market startup secondary shares. So folks who are trading shares of private companies on secondary markets. And here's the top 30 list. Anthropic is number 1, SpaceX number 2, and Enduro, Stripe, OpenAI is 5th. Notably, prediction markets, Polymarket 7th, up 8 places. I want to say on the quarter. This is quarter over quarter change. And Kalshi 11th, up 13 places. So prediction markets, 2 of the top 11 highest in demand private companies in the world. Peter, I'll toss this one to you. Were you surprised by that? And or do you think they go higher in the next 6 to 9 months on this list?
Well, there's good news yesterday on the prediction market front. Some cases were won in New Jersey that are really beneficial to the prediction markets, and the CFTC is actively suing states. So we are setting up for what I think is inevitable, a Supreme Court case at some point in time. Now, the question is, when will that happen? And that's really hard to speculate on. My base case was that we would kind of have this back and forth and a bunch of lawsuits and whatever else, but nothing meaningful would happen, at least until we have a new president. Just given how much the people in place of power at the CFTC, the Trump administration, the SEC, they're all pro-innovation and I think really backing prediction markets. So I thought we had a couple of years. I don't know if that's the case anymore, given how partisan this has become. But in the event that regulation goes favorably for prediction markets, the TAM for these two businesses and other part players that are getting into this is absolutely gargantuan. So I think there's merit to the valuations. They would be much higher if we had regulatory clarity. The downside, obviously, is that it goes poorly, specifically on sports and some other things, which I think is probably over a 50% chance. And in those scenarios, these companies are overvalued given, really, really lofty valuations. So regulatory clarity is really what's needed, and I don't think we're going to get that anytime soon. So that's why there's a market for it, and it's really speculative, and it's certainly really interesting to kind of see the growth of these products, and of course the valuations. And they're definitely two of the hottest names as someone who's really active in private markets and following a lot of these names.
I feel like a broken record, but like the volumes are just crazy to see, and open interest just continue to grind up.
Wait until the fall.
Yeah,
Things are still in place. This fall is going to be bananas.
There's World Cup for sports this summer, and then of course midterms it'll be the highest ever predicted.
Football will be back.
Yeah, football. So you have this confluence, and I mean, I tweeted this out this morning. We talk a lot, like the sports are a huge chunk of this, but I mean, even the crypto markets. This is the crypto chart for Polymarket. They're doing 600 million a week in crypto market volume. Kalshi is doing 250, 300. So there's almost $1 billion a week being traded just in crypto markets right now on just the top two, and there are other big players. So the growth is very substantial. It's hard to argue with, and clearly other investors want to get access to this. So it makes sense to me. I said on FOMO this morning, I would not surprise, barring any major legal regulatory setbacks, I think we'll see both of them in the top 10, maybe even one in the top 5, especially if like SpaceX or someone IPOs in that time frame and frees up a slot. But putting the prediction markets aside, and we do talk about private markets a bit on the show. Anything else that jumped out from this list of top 5, 10 private market companies? I mean, Anthropic.
I like Neuralink at 9.7 in the last round. I don't know what they're trading at now, but that's the one that felt a little different and got my attention.
Oh, interesting. I didn't even go through the valuations for all these. I was kind of just scanning.
I was more pegged to the last round evaluations, and also the discrepancy between Polymarket at 9.6 and Kalshi at 22.
Yeah, I'm ready to go. I'm ready to go 5x long
on Polymarket.
Neuralink at 9.7.
Neuralink just, I mean, that could be $1 billion company in 10 years. Or trillion. I meant trillion. Why the fuck did I just say billion? Wrong denomination.
I think perhaps just a concern, like, will it be like enveloped via another Elon company? But that's not necessarily even bearish. Anthropic up top, and we have to just quickly share this. Yesterday they shared their ARR. Is it 30 billion? It was just 1 billion.
It just jumped an insane amount over the last quarter.
Yeah, the last quarter jumped from what, like 18 to 30.
Yeah, something. Over 10 million.
Yeah, I think Turner actually tweeted that out as well. I'll try to find the exact numbers. But just staggering growth.
I mean, all the stuff, I think we talked about it before Easter, but all the stuff they added over the last month that like kind of made it so you can do the open Claude type setup within the Claude suite, like that, I'm using it more.
Are you
being able to do it from my phone and have it like, I think I talked about it, but I have like it reading all my emails. I'm like not checking my emails. I got like 25 different fucking Pokemon card alert things set up. So if anything is a good deal, I'm like on top of it, and it's letting me kind of be a little bit more present with the baby and not think about shit. Cause it's like, oh, I didn't get that notification, so everything must be fine.
That's great.
So I like it a lot more. And then the more you watch your kid develop, the more you think about like how we could use AI to help the kid develop and like educate them.
That's been a real eye opener for me. I mean, you can basically build your own personalized education system if you want. Like homeschooling has never been easier, and I'm not necessarily pro homeschooling. It's a longer discussion, but it has never been easier to develop your own learning systems. I'm just looking at this chart though. Just coming back to this. This is staggering growth. So here's their run rate revenue has surpassed 30 billion, up from 9 billion at the end of 2025. So they're currently at 380. Are you a buyer of Anthropic at 380? Peter, maybe I'll toss that to you.
Feels like it's
For
going
sure,
over,
you're a buyer.
It's going over $1 trillion.
380 is a snap buy, and a little alpha for people out there, and definitely do your own research. Again, you gave the disclosure, not financial advice. But there are ways to get some exposure to Anthropic through public markets, specifically Zoom, ZM, and SKM. And I'll just want to make sure I get my data here correctly. But in particular, I think Zoom is a pretty interesting buy if you're bullish on Anthropic, given how much of the balance sheet it is. And I'll give that here in just a second. But yeah, I'm extremely bullish on Anthropic, and I think there's merit to it being the number one. And if you just look at the revenue run rate, I mean, I think this will definitely be a $1 trillion company when it IPOs.
I would agree. I am curious what that means for OpenAI. Will there be enough? I guess I've said this a few times. Again, a little bit of a broken record. A little concerned about these big three IPOing this year: Anthropic, SpaceX, OpenAI. If there will be enough capital to support that. Anthropic at 380 seems like the strongest buy by far on the list. SpaceX at 1.25 trillion. I like on a 5-year time horizon, 5-10. I don't know if I like it on a very near term. Saying basically you perhaps could get a better entry. And OpenAI feels like a total wild card to me. It feels hard to trust, but also almost like a little too biggish to fail, almost. So I'm perhaps more neutral on that. Dee's curious if you have a read on those three while Peter pulls up the Zoom.
Yeah, I got it. And I've done this research before. I just want to make sure I got it right. So Zoom invested $51 million into Anthropic in early 2023. That puts the valuation, depending on dilution, which we don't know, of at the 380 number, between 2 and 4 billion, certainly a lot closer to 4 billion. If you start to, make this worth more, you're in the $5 to $10 billion range on Zoom. In addition, Zoom owns $7.8 billion of cash and has zero long-term debt. The enterprise value, the market cap is 24.3 billion minus the cash is 16.5 billion. So you start looking at this and you say, okay, wow. I mean, this could be a quarter to a half the enterprise value of Zoom. Now, Zoom's business itself is not as sexy. It's certainly not as sexy as it was once when we were in COVID, but pretty interesting setup if you want exposure to Anthropic, given the high amount of cash, no debt, and a quarter to half of the enterprise value, depending on what you price Anthropic at, being part of Zoom. So to me, that's somewhat interesting, and that's something that I've been participating in. Full disclosure, I own the stock. Again, not financial advice, but I think there's ways to kind of go look at these things. And there's certainly other names that own Anthropic, like Amazon, I believe Google does, but it's not material to the enterprise value of those companies, just given the size.
I can never remember if you can trade Anthropic. There it is. Oh, wow. Oh, you're paying a hefty premium on Hyperliquid. So it's trading at
700.
Yeah. That feels a little more directionally right.
Only 1.8 million of open interest.
Yeah. Yeah, I think you get to be
this market's untradeable.
Yeah.
I mean,
the Zoom chart looks nice. I pulled up Zoom. Just it has a 3-year consolidation after dumping from $600 to $50 or $60. Like we're due.
Well, the core business has clearly changed dramatically. So do your own research, look into that. I was just more pointing out that it's an interesting bet. And there's actually a big inefficiency. If you kind of look at that huge green candle, that was there's been a couple of them correlated with Anthropic's raise and kind of the appeal more so in the January timeframe.
This
That one,
yeah. Okay.
yeah. And I actually was doing research on how to get exposure, and this was a little nugget that I found. Again, a great way you can leverage AI is trying to figure this stuff out, because I would have had no way to figure this out before, trying to dig through all these things. I just asked AI, hey, I'm bullish on Anthropic. Outside of buying on the secondary markets, are there any other ways to play this? And I got Zoom as an option, and this was before the big run up. So, yeah, there's great ways to leverage AI for investing. And I do have SKM as well. They invested 100 million into Anthropic in August 2023. They have somewhere between, they probably have about a couple $2 billion of Anthropic stock within their enterprise value. That right now they're currently worth, their market cap's 11.3 billion, but the enterprise value is 17.6 billion, because the company carries significant debt. So in this situation, it's a much lower percentage of the overall business. I mean, not significantly lower, but somewhere in like the 10 to 15% range, maybe a little bit higher, maybe 20% if you apply a much higher valuation to Anthropic. So those are two names to just watch if you're bullish on Anthropic, and certainly do your research on the businesses. They're much different businesses outside of their Anthropic shares.
Very interesting. Well, thanks for sharing that. Yeah, I hadn't really thought about going down the ways to get exposure via public markets rabbit hole. So it's a good alpha. I mean, maybe since we're on the topic of kind of what we're trading, we just talked about trading private market companies, ways to get exposure. Deez, are you trading anything on chain these days? I think we talked about maybe a couple tokens before the show while we were chatting. Have you been making any moves? You've been spying anything?
Yeah, I think last time before Easter, I talked about buying a little bit of Zero. I bought a little bit before Easter, and I bought a little bit more over the last day or two. So that's been nice. It's under, or it was under like $1.85. I guess now it's going back up a little bit. I went down to $1.75. But this is one we talked about when it was like going up to 225, 230. And I had said if it retraced lower, I'd start buying it. So here we are. I'm just sticking with the plan. I'm sure it'll go down to like $1.50 or something, and I'll buy more. But we'll just keep buying it every dip. And then I didn't buy any, but I think we also talked about this before Easter, jokingly, half jokingly. Lighter went under $1, went all the way down to like 75, 80 cents. And now it's actually back up to almost $1.10. So finally, maybe some light at the end of the tunnel after the.
Are you guys light talked yet?
Well, I'm not in the chat, but I'm there in spirit as I open up.
Do you have a bag, Deez? Because I could add you.
Yeah, my bag is not probably meaningful compared to the people in the chat, but I've been holding it since $1.50 when I swapped some Zero.
Let's get you in. Let's get you in the mix.
But it's just been good to see that, like, finally maybe put in a bottom. I don't know, like, all things relative. It's been good since we last talked, so I had to bring that up as well.
I'm not going to let the light tarts trap me on today's show.
Maybe next week when it's back to $1.25.
But congrats on the 35% pump off the bottom. That is,
yeah. We had to lose 50%, Tyler, to gain 30%, but that's how we fucking do it out here. Okay, that's a win.
It looks a lot like this move off the bottom. What was that? Yeah, that was also 30%. One to monitor. Do you feel like more of a perps question, lighter in that category? Will there be extended fallout from the drift exploit?
I don't know, because the way the exploit, I mean, do you think that this is happening to other DeFi protocols or other big products in the ecosystem where they get invaded or, socially engineered throughout the course of months, if not years? So I think every other protocol should be hyper paranoid. If they're not, they should have been hyper paranoid before this, but if they aren't hyper paranoid, they should be hyper paranoid about who they're hiring. I don't think it's too big of a contagion. I didn't make any trades based off of it, but I do think maybe it's a good wake up call for protocols who aren't taking it seriously.
My concern on this one, I tend to agree. I guess I'll just play back the story for anyone who may have missed this one. So Drift protocol was hacked, exploited last week to the tune of $285 million. Has to be one of the largest exploits we've had. It was North Korean hackers, and more details come out about the way they went about it. Effectively kind of a combination of a technical exploit as well as social engineering. They went to these crypto conferences. They met the Drift team. They set up group chats. They were chatting with them. They launched. They put money on the protocol. They even created this token. And long story short, 6 months of building up trust with the Drift team, and then on April 1st, in 12 minutes, they drained $285 million. Just via access to the protocol, things they figured out ways to exploit it over that time. So they played a fairly long game. I think one concern is, are other teams vulnerable to this? Is this already happening, or is this exploit live happening to other protocols? I would bet yes before no. Then I think that the bigger concern is, like, how many of these exploits can you live through before you just decide to stop playing in DeFi and perps with any meaningful capital? I don't think we're there yet, but I feel like every time one of these happens, it does kind of chip away. It erodes that trust, and like, oh, there's other ways I could be doing this. I don't want to come across as bearish, but I feel like that is objectively how I think about it. This is a huge amount of funds to lose. And it does still seem like we're getting one of these headlines every 3 to 6 months, and they're not necessarily slowing down. If anything, it's going to be easier as AI accelerates. So it is a concern of mine. I don't know if any of the major protocols are vulnerable. Hopefully teams are in war rooms trying to figure that out at this point in time. I don't know that we've seen a big dip in, like, on Hyperliquid's open interest or anything. I haven't seen anything to that tune. I mean, their HIP-3 open interest is continuing to be way all-time highs, so that certainly hasn't taken a hit. Hyperliquid, the token, is down a bit, but kind of hard. I don't know if you're necessarily chopping it up to that, right? Just broader downturn. So I haven't seen much reaction to that. Deez, have you seen many folks or much sentiment of, like, real concern or exiting tied to the exploit?
No, I haven't seen any of that. I think maybe it hurts the trust of more upcoming protocols that aren't established or don't have the volume and time plus reputation that existing platforms happen. Like, I don't think it hurts hype or, I mean, even lighter or any other of these other protocols that haven't been exploited and have put in significantly more volume over time than Drift. I do think maybe it makes people just, like, gun shy to try newer stuff, but I feel like it probably doesn't, because the people who try new stuff in this industry are, like, fuck it YOLO capitalists anyway. Like, I don't really feel like they know what they're getting into. So I don't know. I think if anything, it makes existing teams hopefully just more paranoid. And maybe I saw the viral clip of, like, call Kim Jong-un a fat ugly pig to prove you aren't from North Korea. Like, maybe you just add that into every interview you have with somebody, just as, like, a, final exit question. Just like, oh yeah, hey, by the way, just, like, can you just say Kim Jong-un is a fat ugly pig? It's just for, like, internal purposes. And if they drop off the call and can't say that, then, like, okay, boom, and you're gonna help eliminate some some candidates who would spiral you later on.
Yeah. I have strong views on this. I do think it's a really big concern, and as someone who's been really active in kind of the yield streets and DeFi, I just don't think you're getting paid enough right now to take the risk relative to having money in treasuries or elsewhere, which is super big bummer. I still have some capital out there, but have actively been trying to really think through the exposure that I have, given just all these exploits, and it's continuing to go up. There's been a tremendous amount of issues across the board. And I actually, Tyler sent something in our Telegram chat for the show, but a good friend of mine is building a prediction markets community picks and shovels business. And he got hit with just a ton of North Korean imposters. I mean, it's incredible. This is happening everywhere. So this is clearly working for them. And I've heard about this for quite some time now. And it's clear it's impacting crypto, which is probably the easiest place for them to get capital quickly. So it's a frustrating time because I love DeFi and I hope that we can figure it out. And I do think you really need to put a huge premium on the platforms that take security really seriously. And there's some resources that you can look into, but it's a bummer because there was quite a bit of opportunity to create and generate yield. And I just don't think you're getting paid enough now, given the risk of going to zero with some of these hacks, which is a huge bummer. So hopefully we can start to fix this and we don't see as many issues. But I have no evidence to suggest that we're not going to see more of this going forward. So it's something I'm monitoring, and hopefully we can get it figured out, because I do think DeFi is great and a true innovation that crypto's brought to the world.
Yeah, I don't think there's really much good yield on chain right now either. Like, I don't have any dollars at work on chain.
I think another problem with the timing here is that at the same time you have the biggest institutions in the world starting to roll out these products. And we're not there yet with full DeFi or perps trading, but just this past on Friday, Charles Schwab's like, okay, we're going to throw our hat in the ring, and you can start trading spot Bitcoin and ETH in your existing Schwab account. They've got 12 trillion assets under management. As these alternatives continue to grow in utility, folks will really have to weigh the risks. Like, do you want to do this on chain, or do you just want to do it in your Schwab account? And it feels like it's coming to a head. And every time we get one of these exploits, it makes the decision perhaps a little easier for some folks, probably lose folks. And I think the other aspect of it is just a wake-up call for individual users as well. I mean, I think the most sophisticated hackers are going after bigger prizes. They're not going after smaller fish. But just think, like, how often have you been in a group chat or put into a new chat with folks you don't know, and you're clicking links, acting without proper security practices, right? I know I find myself still doing that every now and again. It's just a good check to separate your big balances if it means using separate computers, whatever it means for you, right? Just a wake-up call to take all this seriously. So an unfortunate reminder, and one that may have some more consequences. But with that, I think that kind of went down my list. I guess, Peter, anything that you've been trading on chain or looking at? Before we close up shop.
Yeah, I've been actively trying to find, because same boat of just disappointed in some of the yield. I've been looking for some delta neutral strategies. I think lighter is somewhat interesting in that regard. But broadly, I've been trying to de-risk my portfolio. I've been keeping an eye on Bitcoin. I've listened to quite a few podcasts recently on like the bull and bear case for Ethereum. I still think that, if we see another 4-year cycle, I think Ethereum really does set up well, given I think institutions will be interested in buying it. But there's certainly huge bear cases as well. So you can make similar arguments, I guess, for Solana. So I'm trying to pay attention. If you believe in the 4-year cycle, which I generally wasn't a 4-year cycle person, but given how things are playing out, maybe I should be paying more attention. Sometime around October of this year would be a pretty good time to be looking at crypto. So I'm trying to be still in the weeds, looking at things, but I'm not making many moves outside of de-risking my portfolio, which is a combination of just what's going on in the world, plus these hacks, which makes it just really worrisome to have money on chain.
Yeah, generally in line with where I am. I think nothing too unique to share. I think Dee's brought up the zero. I think zero is one of the more interesting. If you're wanting to take a trade,
For sure.
I think it's one of the more interesting ones out there.
Investing Monk with the man 4-year cycle. Don't, Peter. Trust me. I was adamant about it that I wasn't. I thought the 4-year cycle was over, and sometimes you have to admit when you're wrong. I mean, I don't know. Like, what do we think about the 4-year cycle now? I guess we can close that before the giveaway.
I was the loudest anti 4-year cycler, and then the damn Reddit thread hit the Pico top day to the day, just using basic 4-year cycle analysis. It's like, how many times can you argue against it? If it plays out again, it's going to be like October 4th, 2026. So like literally, like just set your alarm. And then that day, go buy some on chain. I suppose. I personally don't want to believe it. But if October 4th or 5th of 2026 is the bottom, I will be fully converted believer forever until the next cycle top, which when I'll convince myself that cycles are over again. But we will certainly see. D's, are you setting your alarm for October 4th?
I'm just gonna keep slowly buying, I think, all year instead of trying to time it on the nose. I got a good tax update, so I basically, found out I don't need to pay much in taxes at all because of some tax loss harvesting I did at the end of the year.
Congrats.
So I'm taking some of the money I'd set aside for what I thought was going to be a big tax bill and just like slowly throwing chunks into stuff over the year. And we'll see how we end up by October. But I probably will end up front running it a little bit rather than just trying to time it.
I'm not sure if there's a better update to get from your account than that.
No, dude, it was a great update. Like you get that email from your accountant and you're like, oh, fuck. Okay, let me read it. And then you click it. And then you kind of just like don't read anything, but you just look for the bold numbers in the middle of the email. And then you see the number and you're like, oh, is that a typo? And then you read the email and you're like, oh my God, we did it. And then, yeah, it's a great feeling. The best feeling in the world, honestly. It's like then when you pay your bill for your accountant, it's like, okay, well, that feels better than paying the bill and then the tax bill that's massive on top of it.
Well, now I'm manifesting that update from my accountant here in the next week. So if you're listening,
yeah, please Tyler's accountant
to get one of those. Well, good show. We went around the horn. Before we wrap up, we do got to get to our Yeet giveaways. So as we've been doing, we're going to give away 2 $500 prizes to Morning Minute affiliates who are signed up over on Yeet. And while we get the board up and running, reminder that Built for Big Moments is officially live. The Morning Minute's crew took down the top prize last time. I think we won $30,000 shared with everyone who participated, basically on a volume adjusted basis. So there's never been a better time to play than it is during Built for Big Moments. So just shout out if you are interested, go on and play. Of course, as always, gamble responsibly. And with that, Bruce and Charlie, let's give it a spin. So this is our weighted wheel. You will notice. And we'll do a random spin now. There you go. RG Ryan Rossi Reborn. There you are. He's been commenting. He's been manifesting it. So congrats. You were number 1 on the board and manifested the win. Whew. Congrats to you. That's $500. As a reminder, you'll need to go and log in every day. $100 per day. That is the new rules per the Yeet team. And now this will be our more evenly adjusted wheel. All right, 3D lap. If I see that correctly, 3D lap. All right, congrats to you. You have won as well. Well, folks, I want to thank all of our listeners for joining us here today. I want to thank my co-hosts. Great conversation today, guys. We will see everyone next Tuesday at 12 p.m. Eastern. Till then, have a great week. Bye.